Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And holy moly, another 52-week high for the SPY and bears continue to cry. This whole blue zone here, right here, I mentioned that it was the area of imbalance. If you guys recall to Uncle's general lean yesterday that I mentioned in yesterday's video, I mentioned it was an area of imbalance between the 432 level and the 437 level, but I didn't quite get into details on what I meant. But one thing I do want to mention is that this area of imbalance, which I will explain, it provide very good support resistant levels. Okay, so this area of imbalance started from the 432 level up to 437. Now, if you look at this big red candle right here from April 22 of last year, if you look to the immediate left and the immediate right of this candle, we don't have any other candles next to it. No wicks, no bodies of candle. Okay, to the immediate left, you see there's nothing to the left and there's nothing to the right. And it's a big red candle, which indicates selling. In this case, there's an imbalance in this zone of selling, and the market likes to keep a balance. Or when there's an imbalance, the market at least likes to fill it. They're kind of like gaps, only it's based on a different concept. But as far as filling it goes, it's similar to gaps. Okay? But in this context, it's about the balance between buy orders and sell orders. In this case, in this zone, there was an imbalance of sell orders. And today you guys can see, if I zoom back to the right, that the market filled it pretty perfectly. Okay? So that's how you find areas of imbalance. So now that it got filled, we could still reference it as support resistant level. The halfway point was around 434.5. The top was 437 and the bottom was 432. All right? But now that it's gone, we can get rid of it and we can identify the next, if there's any other areas of imbalance at the top, okay, that could potentially get filled and help us get more support resistant level. Now, it's a bit far apart, which makes it a bit of a hassle, but you can see from this candle right here, all right, I'm going to zoom in so it makes more sense. But April 21st candle, there's an area of imbalance. So from the low of April 20th candle, that's at 443.48. All right, 443.48. And we bring it down to the next wick. All right, that next wick was the high of April 22nd. All right, so let me zoom in there so you guys can see what I'm talking about, because it's so stretched out, it looks weird. Like, what's Uncle talking about? So you guys can see on this April 21st candle, you look to the immediate left of it and the immediate right of it, there's no activity. This whole zone right here was just an imbalance of sell orders. Okay, I actually should not have used a rectangle. I should have used a parallel channel, because the parallel channel gives us a 50% retracement zone, which is another, we can use as another support resistant level. All right. So you can see here that it starts at, the bottom starts at 438, which we consider a resistant level if 437 can clear. The 50% line is around 440.7. And the top of the range is 443.5. Okay. So if 437 clears tomorrow, because we can see here on the smaller time frame 15-minute chart, we can see it was basing just under 437. So there was some selling pressure. All right. So that's the level that bulls need to clear. If they can clear 437, all right, we can head up and fill the area of imbalance up to 438, 440.7-ish, and maybe up to 443.5. All right, to put some buying, some buying pressure there, and then maybe we can finally get a decent correction or pullback. All right, now this is not a prediction. This is just based on the concept of area of imbalance. It worked pretty well based on April 22nd candle. All right. It's similar to gaps, and like gaps, it doesn't have to get filled right away. That area of imbalance took a little over a year to finally fill. And now we are so close to the next area of imbalance. I'm wondering if that's going to get filled. And if it does, 437 and the 438 level must clear to trigger more upside. Okay. So, yeah, as far as CPI today, I mentioned about the blueprint of how to trade these. The initial reaction is usually the fake reaction. We got a gap up thanks to CPI as a catalyst. Unfortunately, the blueprint did not work well today. We got it cleared 435.5 at market open, triggering more upside thanks to CPI. And then intraday, we broke down 435.5. I'm thinking, okay, false breakout, time for the reversal. And unfortunately, even Uncle Charters got faked out. And of course, I respected my stop loss because sheep don't bag hold. We don't bag hold. I cut my loss, right? Because it did not, the breakdown did not hold. But look at that. False breakdown setup. The greatest setup of all time. This was alerted in the group at 10:36 a.m. 4:35 recaptured it. False breakdown setup with 4:37 back in play. So we had one decent move. All right. We played the traps. Uncle always talk about play the traps. I mentioned, especially with CPI, the false breakdown, the false breakout setup will be your best friend. The false breakout setup wasn't very kind to me, but Uncle was able to be kind to himself, cut the loss, played it unbiasedly, switched to calls, and played it level to level. All right. It didn't get the best gains today, but I was able to erase my loss and ended the day on a small green. And then we just spent the rest of the day chopping. All right. The setup that I was looking for was a breakout of 437 for longs to continue upside, or a breakdown of 435.5 to cancel this false breakdown setup. As you can see towards the end of the day, we got a bounce off 435.5. All right. So based on this chop zone, all right, based on this chop zone, we know the range. We know the chop range. All right. If we clear 437 tomorrow or gap up above 437, that is bullish. All right. That is bullish. The only way I would be bearish is if we get a false breakout setup. We close above 437 and then close back below 437. And then that would be bearish. But other than that, if we clear 437, I mentioned earlier about the area of imbalance above 438, 440.7, and 443.5. Those would be my targets for upside targets if 437 clears. All right. If 435.5 fail, all right. Remember, we had a false breakdown setup of this level in the morning, and in the afternoon, we tested it as a support and it confirmed. This is what price acceptance look like. When we clear a resistant level, all right, and then it back test it or retest it as a support, and then we find buying pressure, that's the market makers giving us a sign that they accept this level as the new buy level. That's usually a bullish sign. So as long as above 435.5, I'm bullish. But if it fail, that's our trigger to go short. All right. Now, one thing I do want to note, since last week, and it's been happening for a long time. This is why Uncle tried to say the false breakdown setup is the greatest setup. But I'm just going to talk about the most recent action. Remember that 427 was one of my pivot levels. Last Thursday, it was the false breakdown setup of 427 that led to a breakout of the chop range. Okay. Now, if we look here on Friday, you can see intraday, we broke down 429.6. That's a critical level. Took out all the stops that tried to long the breakout. And then we ended the day on a false breakdown setup, which led to more upside. Okay. Even when it back tested towards the end of the day as a support, it held and it led to more upside. The false breakdown setup has triggered a lot of rallies for 2023. Now, today we had a false breakdown setup of 435.5, and towards the end of the day, we back tested it as a support and it held. Does that seem to look familiar? to you guys. All right. So do you guys see why I'm bullish above 435.5? I would turn bearish below 435.5 to favor 434 to 433.5 zone. That's a gap fill. 433.5 to 434 zone. That's a gap fill. And below 434, that will put 432 back in play. Look at this breakout. Remember yesterday, this was a pivot high on a Friday. And then on a Monday, we broke out of it end of day for the end of day rally. So 432 is pretty important. If that's lost, that would be pretty bearish. Okay, guys? So, pretty simple for tomorrow. Watch that breakout of 437 to be bullish. Watch the breakdown of 435.5 to be bearish. Now, that's just based on the price action. FOMC is tomorrow. Now, if you're looking at the investing.com, you see the previous was 5.25%, forecast of 5.25%. Looks like we are expecting a pause. All right. In the previous time, we expected a 0.25 increase. We got the 0.25 increase. Today, for tomorrow, we're expecting a pause. So I'm thinking if we get a pause, there's two things that can happen if we get a pause. If we get a pause, that could be good news. The market could react bullish, or it could be a sell the news and the market could react bearish. If we don't get a pause and we raise some more, we could get a bearish reaction because we didn't get a pause. So there's more reason to be bearish than bullish. But you guys already know that price action has the final say. I gave you guys my levels. All right. The FOMC will be released at 2 o'clock and then Powell speaks at 2:30. Watch for the false breakout. Watch for the false breakdown setup. I highly doubt that FOMC will not be volatile like CPI was today. I highly doubt we will chop tomorrow. Okay, if anything, we did rally since last Friday about $10. Okay, and then with FOMC tomorrow, this could be a calm before the storm thing. So it's not too surprising that we chopped today. But, you know, with CPI, I just thought we would get a bigger move. Unfortunately, most of the move happened pre-market. But FOMC is during the market in the afternoon. So get ready for that. It should be exciting. Remember the levels. Above 437 is bullish with 438, 440.7, and 443.5 above. That's the area of imbalance. If 435.5 fail, you guys see that false breakdown setup has been triggering every rally lately. So if 435.5 failed, this cancels this false breakdown setup, which would be something different, right? And could be a sign to be bearish with the lower targets I've mentioned in play. All right. Overall, I'm still bullish above 429.6. But if 429.6 is lost, guys, I'm ready to switch over to bearish. I will not argue with the price action. Okay. QQQ has also had a consolidation day similar to the SPY. But to keep it quite simple, 363 is support and must hold. If above 363 tomorrow, and I need to see it clear 365 to trigger more upside up to 367, 368.5, and 370. All right, but it must hold 363 and get above 365. If you want to be bearish, below 363 would be when I would be bearish, triggering targeting 361.5, 360, and 357.5. All right, those are the levels. IWM, I mentioned you guys, we were bull flagging. We were bull flagging. We got the breakout of the bull flag above 187. I mentioned to be bullish. We were able to pop up to 188.9-ish, almost 189 high of the day before we pulled back. So with the breakout of 187, that's a critical level for tomorrow. As long as above it tomorrow, stay bullish. Look for the breakout of 189 to put 192.5 in play. If we break back below 187, that means 186, 185, and 183.4 are back in play. Below 183.4, I would be bear bias with 179.6 and 178 as targets. Tesla, holy moly, what a beautiful, beautiful trade setup with the Tesla. Guys, I covered Tesla. All right, bull case. The range is 242 to 252.5. I was referring to the inside daily candle. This was actually mentioned in yesterday's video, I don't even need to refer to Discord, but I mentioned the inside daily candle to you guys yesterday as a setup. And the mother candle's high was 252.4 with the low at 242. I mentioned to you guys, if above 252.4, look to long. Below 242, look to short. And look at that. We cleared the mother candle's high, and it gave us a new high going up as high as 259.6. I hope you guys listened to Uncle and traded this unbiasedly. All right. So you guys see here, the Tesla is, it took out all my Fibonacci extension levels. So I need new levels so that I can trade. All right. So what I like to do is to find these extension levels. I find a pivot high, right? I find a pivot high. I bring my Fibonacci level down to another pivot low, and it'll give me the extension. So in this case, I had it at March 31st high down to April 27th low. All right. So now I need new levels. So for now, I am going to bring it to the pivot high of February 16th and keep the pivot low of April low. Okay. So let me get it's correct. All right. So now you guys can see here, I got new Fibonacci extension levels that I can work with. And you see, we cleared the 1.61.8 fib level at 257.9. All right. So for tomorrow, if Tesla breaks down 257.9, I would be bearish. I'll look to short. I got support here at 252.6 and 250. If it breaks down those support, look to short. Tesla's very volatile, so don't be sad if you miss the top. All right, short below those support with 244.5, 242.5, and the gap fill at 235-ish in play. Okay, to be bullish, I would like to see 250 hold on any pullback, but preferably 257.9 defend as support as well. And to fill the gap, all right, we need to clear 260 to go fill the gap at 265. This gap is from September 30th of last year. That's at 265. And if that clears, 268.8 is in play. Apple, it's still lingering around here. It doesn't look too bearish. Okay, doesn't look bearish at all, to be honest with you. It still got that all-time high at 184.9-ish. If we can clear that, 188-ish would be in play based on the Fibonacci extension level. All right, if we break down 182, 180, and the critical one at 177.7, that's based on the uptrend line of 2023 is in play. Okay, we break down that uptrend line of 2023, that is when I would switch to bear bias. Otherwise, I'm still bullish. Watch for the breakout of 185 to put higher targets in play. Okay, AMD got a gap up, try to cancel the double top. Instead, it just gapped up, took out all the stop losses, break back down 130.4, which was the double top was at, and dropped all the way down to my 122.5 level. Okay, excuse me. Yeah, it's a nasty drop if you ask me. Okay, if it wants to show follow through, 122.5 must fail as support. If AMD it breaks down 122.5, guys, look to short with 120.8, 117 in play, 111, and there's a gap fill at 108.4-ish. Okay, for me to be bullish, it needs to recapture some levels, starting with 126, 127.5, 130.6 to put in 133, and possibly higher targets in play. Okay. NVDA, what an amazing trade on NVDA. I wrote this in the trade idea room. Trade idea room is for my tier 2 members where I give all trade ideas other than the SPY and ETFs. Okay, I threw NVDA in there. I wrote 399 is my equilibrium level. Above it, I'm bullish. Below it, I'm bearish. So as long as above 399, I was long or I was looking to long. I wrote here, as long as above 399, stay long or look to long. If fall 2.7 clears, to put higher targets in play, fall 4.5 to 405 zone, 407, and 412. Okay, I was only bearish below 399. So you guys can see here, it stayed above 399 and it cleared that fall 2.7 level at 10 o'clock, triggered a very nice move going as high as 411.2-ish. Almost hit my 412 target. As of right now, This support at 409 and critical support based on the fib level at 406.8. As long as above, I'm bullish. Look for the breakout of 412 to trigger more upside. Put in 415 and 419.3-ish in play. Okay, if you want to get bearish, you can look to short below 406.8 or 402.7 to put 399 and 396s in play. Okay, guys. Now here's the VIX. We got the gap up yesterday, but today didn't show much follow through, just a sideways day. Let's see what FOMC, if we can increase some volatility, if we can get some volatility from FOMC, because we didn't get it with CPI. Maybe this VIX can drop up, pop up some more. Okay, overall though, I have support at 14 and 13.5. There's some resistance forming at 15 to 15.5 zone. Must clear to put 16, 18.5, and 20 in play. Okay, if it breaks down 14.5, could see 13.5 or lower. All right. Now let's see. Here is the option flow. Well, this is dark pool. We have 4.5 billion at the 433.6 level, and that's very interesting because we had the gap up from around that level. So dark pool definitely provided some liquidity for the gap up. All right. So 433.6. If you want to be bearish, you want to see that level fail as support. Otherwise, continue to stay bullish. And let's go check out the option flow for SPY. Filter for 500K premiums or above. It was very bearish yesterday. Did not work out. Those people got smoked. All right. Maybe we can use this as a contrarian indicator. But those people got smoked. Today, not that much contract was traded. A total of a little over 20,000, but leaning towards the put side. QQQ, also not much contract traded, but leaning towards the put side. This one, June 23rd. 355 strike price, that sticks out. Let's see if they get it right. IWM, 88% in the puts, a little over 12,000 contracts. Not much. Getting some block orders here. 190 strike price for July 21st. Not very aggressive. What's next? NVDA, 100% all in puts, over 15,000 contracts. 420 strike price for June 16th. Interesting, that one. Over 5,000 in size. All right, that's pretty bullish. AMD, 71% in the puts. All right, mixture of sweeps and split orders, but nothing that really sticks out. Tesla, 85% in the calls. All right, over 36,000 contracts leaning towards call. Did I get Apple? No, nobody traded Apple. And here's the VIX, 100% in the calls. All right, guys, thank you guys so much for watching. If you guys need some help trading with FOMC and want some extra guidance, consider joining Uncle's Discord. Other than that, I hope you found this video helpful. I really try to make it helpful and simplify it as best I can. And just have a great evening. Peace.